Let's talk some earnings and let's do some trading. I got Tom looking at options in Target, Shana Sissel joining us to look at the numbers and also peer ahead at Cisco coming up. Shana's president and founder at Banríon Capital Management. Good morning, Shana. Excuse the Godfather voice. Good to see you.
Good to see you. I was going to comment. What's going on with the voice? Sounds like you're a little under the weather.
Yeah, I don't know. It ran up and left. Let's talk some earnings here. Target, what do you think, Shana? Does it deserve to be down near 52-week lows, or can maybe it join Walmart near highs?
I think it's having some execution problems. You know, we've had multiple quarters of which it was disappointing. Margins are under pressure. They're expecting to see margins continue to deteriorate this quarter in their outlook. Consumers under pressure. It's not my favorite stock, especially because it hasn't done a great job with execution as of late. Not particularly cheap. It's trading at 18 times, which is in line with the market. It may be at near its 52-week lows, but it's not a name that I'm particularly bullish on right now.
Do you think this is happening because people are having to price down in what they spend and Target's TVs, couches, higher-end stuff? Is it not enough staples and groceries?
Well, Target's interesting because I do think it can benefit from the fact it's not a higher-end retailer. It's a sort of covers all your bases. You can go there and buy a couch or buy some chips. You know, so there's all sorts of reasons why Target should be doing better than it is, but it has seen some problems with execution of its strategy, and the margin deterioration is my biggest concern right now, and that doesn't appear to be improving. After their last earnings call, they put out their outlook, and they were projecting to see continued deterioration of margins, which is not a good sign. With consumer sentiment being broadly negative and kind of weak retail sales, yes, we saw some positive improvement in April, but we were expecting 0.8%, and we didn't get that. So I just think I don't want to be in the consumer discretionary space right now, even if it's sort of a more affordable discount or a more affordable retail player like Target.
Got it. Okay. Tom, when you look at the options for Target and then the chart, which is stuck basically at 160, like much else, it's pretty much sideways.
Yeah.
You know, the market's not panicking about these numbers, despite some of the margin compression that I do agree with Shana is somewhat concerning.
Yeah, I think if you look at the Q2 estimates, that they're coming in a little bit lower than expected, but at the same time, their full-year guidance kind of met expectations. So if you think this thing is going to kind of consolidate and continue to consolidate at these areas, I looked at a short-term option strategy on this. That takes advantage of the lower implied volatility. We've got the event risk on, right? So IV is lower. That means the cost of a calendar spread will be lower because those input costs are down on an option premiums lower. But I looked at just a 3-week wide call calendar that's basically at the money at the 160 strike going out to the June monthlies, 30 days till expiration, buying the 160 strike call. Against that, to offset some of the costs on it, sell the May 26th weekly 160 strike call. You're paying roughly about $1.90 debit for that. That's going to be your risk on the entire strategy here. You can more than double your money if it continues to consolidate around that apex of profitability near 160. But you've got a nice wide range, as you can see here from the risk profile, for the stock to trade in where you're still going to be profitable on this type of strategy. And that's basically down to about 153 on the downside and about 167 on the upside over the next month. You do have that ability to roll that short option as you get closer to the May 26th expiration. That'll create credits, lower your risk on this particular trade, increase potential profitability also.
Okay, so you're respecting the range for this. All right, so that makes sense. Let's talk about one that's actually been working here. Shift gears over to tech. Shana, Cisco just last month was trading at highs. It has slipped since then, but we've got earnings coming up. Seems to me like a super interesting look here at a tech giant that's gone a little underappreciated the last couple weeks.
So Cisco's interesting to me because fundamentally it's actually quite attractive. It's trading at about 12-time multiple, well below the peers here. I'm not a huge fan of the sector, but I am selectively picking names. One of my favorite names is NVIDIA, which obviously is trading at a significant premium. I think the issue I have with Cisco is that it's a little bit of a legacy player that hasn't been as innovative as of late, but it does have attractive business revenue streams. Some of the channels that are really attractive are definitely in the cybersecurity space. Has a 3% dividend. With the supply chain easing, that was one of their big reasons why they struggled last year. That is very helpful for them. They are a serial acquirer, and not always in a positive way. It's been to their detriment. That is my biggest concern with Cisco, is that any growth they've had, and they're below average the industry in growth at about 13%, has been through acquisition, which I am always a little leery of. But fundamentally, the stock looks attractive, trading at 12 times earnings with a 3% dividend, attractive growth. I think it could be a buy here. It's not number one on my list of tech stocks to buy, but it certainly has very favorable characteristics that if I were looking more broadly at the tech sector and was thinking about adding more names to my portfolio, this might be a name I'd consider.
Okay, nice. I like that. Considering that, as many of the recent favorites were struggling at many points last year, Cisco was able to kind of hang out near the highs throughout much of the past 18 months. Appreciate it, Shana. Thanks a lot for the thoughts here ahead of earnings. We got one more trade with Tom. What do you think? How do you trade Cisco before the earnings?
Well, I think you take a look at that 3.3% dividend yield. That's pretty rich there. But remember, this stock fell a few weeks ago when Juniper reported 30% order decline last quarter. So maybe that's already built into the shares as Cisco competes with Juniper in a lot of products there. So I looked at something that takes advantage of that dividend yield and looked at a covered call where for every 100 shares of stock that you buy, you sell an upside or just slightly out of the money call. I went a little bit more aggressive with this one. It's got over 30% return, covered return on this one, where I sell the June monthlies that expire in 30 days, the 47.5 strike call. Buy 100 shares, sell a call against it. You're paying a debit of roughly $45.70 on it. That's about a 3% discount to where the shares are currently trading. So you have that little bit of cushion to the downside. If the stock doesn't move or maybe moves up towards 47.5, you can continually roll that short option as you get closer to expiration. Now, your gains you can see here from the risk profile are capped to the upside, right? But this might be one of those, pay to wait type of strategies where you want to collect the dividend, you want to sell some option premium against your long stock that creates yield also. And that 3.3% dividend yield, might be the way to play this one going into earnings. But you're capped on the upside, and you do own the shares, so it's more capital intensive than, maybe another neutral to bullish type strategy. Okay.
Interesting. So it is bullish in nature, but to Shana's point, maybe not a screaming buy. Let's see if it can show something a little bit more positive than Juniper did. Good reminder that dinged the stock pretty hard.
Right.
Thank you, Tom. Thanks to Shana Sissel of Banríon Capital Management. When we get back, we've got stocks still ahead to discuss, Take Two included, as we're going to talk a little video games. Markets right now fading a little bit here as the NASDAQ is now red on the day.